Welcome back. Our research team is standing by now with CNBC-TV18's list of top stocks for the day. And let's started with Abhishek on Bank of India and Honasa Consumer. Abhishek.
Well, for Bank of India, it's a CNBC-TV18 exclusive. They will launch their QIP very soon, likely to be in this week itself. So the total issue size could be around 3,500 to 4,000 crore, and the base issue could be around 2,000 to 2,500 crore, and the rest could be over subscribed a green shoe option. So issue price could be at a discount to SEBI floor price. About 4-5% is the general trend that we are seeing in the industry. Demand is good. Some of the BRLMs include SBI Cap, IDBI Cap, as well as DAM Capital, etc. So Honasa Consumer sources say that Fireside Investment to sell about 1.9% stake in Honasa Consumer Limited. Now Kotak Securities is the sole broker over there. Offer floor price is around 368.7 to 384 per share. So the issue size is about close to 234 crores, and the discount could be up to 4% in this case. Back to you.
All right, Abhishek, thanks very much for that. Honasa has been under pressure now for the last, I think it's lost about $100 from the highs just over the last 4 or 5 trading sessions now. But let's move on and, talk about the infrastructure space. JSW Infra and IEX should be in focus. Vivek has got details. Vivek, morning.
Well, good morning. A very interesting acquisition from JSW Infra. Now, what JSW Infra has done is they've taken a majority stake, a 50% stake, that they've acquired from the Shapoorji Pallonji Group. This is for a port called the PNP Maritime Port. The particular acquisition has been done at 270 crore. Along with that, they have acquired another share, that gives them the majority shareholding over there. What does this particular port do? This particular port is a multi-purpose jetty port at Raigad district in Maharashtra. This particular acquisition, values PNP port at an enterprise value of close to 700 crore. Interesting acquisition. And along with this, it has a current capacity of close to 5 million tons per annum, which the company says that they intend to upgrade to close to 19 million tons per annum. The other stock on the radar is IEX. The November monthly, volume data has come out. November volumes is up 17.5% on a year-on-year basis. However, the market clearing price in the day-ahead market has fallen almost 13% on a year-on-year basis, close to 3.98 rupees a unit. The company says the clearing price was lower due to lower demand in the festive season. Temperature drop that generally indicates that electricity demand goes lower. And lastly, improved sell-side liquidity. In fact, the average monthly price is at the lowest level in FY24.
Okay, thanks for that, Vivek. Well, let's go back to Abhishek. He's here to tell us about Mahindra & Mahindra Financial as well as DCB Bank. Abhishek?
There is an update on the business momentum for Mahindra & Mahindra Finance. So for the month of November, disbursements are at 5,300 crore, up about 16% YOY. Year to date, the disbursements are at 36,000 crore, up about 16% YOY. Business asset is up 26% YOY and about 17% year to date. The collection efficiency is flat on a month-on-month basis, coming in at 94% for November versus 94% that they had in October. However, this is on the lower side when compared to YOY. Last year, in the month of November, it was at 96%. So stage 3 and stage 2 loans are at close to where September 23 numbers were, and liquidity in the balance sheet is about 2.5 months. DCB Bank, Aga Khan to infuse about $10 million into DCB Bank. Now at the CMP, if you calculate, bank's tier 1 ratio can improve to 14.56% when compared to 14.28% that they have currently. Now Aga Khan's stake can increase to about 16.01% from 14.03% currently. So the overall promoter stake could actually increase to close to 16.78% versus 14.81% currently. Equity dilution, that could mean about 2.3 to 2.4% of equity dilution if done at CMP. Back to you.
Thank you very much for that. I'm also watching for HCL Tech because one of its key clients, one of the top 15 clients of HCL Tech, is a company called State Street. And they have decided to insource their BPO operations. Basically, instead of giving the BPO operations to HCL Tech, they've decided to set up their own center in India and do the BPO operations in-house. So Stateside and HCL Tech's arm had formed a JV in 2012, which helped, to execute the BPO and the IT services business of State Street. Now the development is that State Street will buy HCL Tech's 49% stake in JV, and the entire BPO operations will now be done by State Street. It's basically a loss of revenue for HCL Tech to the tune of about $97 million currently, or 80 basis points of the current revenue. This will be effective Q1 of next year. But the important thing to note is that this is going to impact only the BPO revenues of what they used to get from State Street. State Street will continue to give them the IT services revenue, so that in itself will ensure that at least a bulk of the revenues perhaps will stay, because this is a big client. But this entire trend that we are seeing of companies going in-house, setting up their own captive centers, insourcing work is negative for IT companies. The other one that I'm looking at is Unichem Laboratories, because the company has announced to the exchanges they will be selling their strategic investment in Optimus Drug for about 67.5 crore rupees.
Okay, all right. Rima, thanks for that. Well, back to Vivek. Let's wind this down then. Vivek, HCC and Bharat Forge, we just got that North America trucks data that came in there. Run us through the news pieces on both.
Absolutely. HCC, two positive news flow coming in over there as far as the company is concerned. Number one, the company's subsidiary called Sterner AG in Switzerland has decided to divest its entire stake in its subsidiary to a French company. The total consideration for this particular divestment that the company will receive is close to 928 crore. Steiner Construction, in fact, had FY23 revenues of close to 2,731 crore. Now, along with that, the company also has received a payout, or an earnout, as the company calls it. This is from Cube Highways. This is a payout of close to 110 crores that the company has received. Remember, in February 2022, HCC Constructions had sold its Barampur-Farakka highways to Cube Highways, and this was one of the earnout methods that the company has received. Talking about Bharat Forge, the North America Class 8 truck orders have come in. It's a good set of numbers for the company this month around. November Class 8 truck orders up 31% on a month-on-month basis and up 3% on a year-on-year basis. So this particular month, the numbers have come in at close to 36,750 units.
Thank you very much for that. Here is a quick recap then of the top stocks with positive news flow are Bank of India, IEX, JSW Infra on that acquisition, DCB Bank with the infusion from the Aga Khan Foundation, Unichem Laboratories, Bharat Forge and HCC. Stocks with negative news flow are Honasa Consumer, M&M Financial and HCL Technology. Okay, let's also now go across to Sudarshan, who will tell us about the brokerage notes we need to be apprised about. Sudarshan.
In the brokerage corner today, we have two stocks that are in focus. First one is Zomato. HSBC has a buy call with a target of rupees 140 per share. It says company needs 15% food delivery CAGR and 25 to 30% quick commerce CAGR over 4 to 5 years for sustained margin expansion. It says demand weakness is a key downside risk for both food delivery and quick commerce business. Second one is Eureka Forbes. Nomura has initiated coverage with a buy call and target is rupees 568 per share. It says company is poised to harness potential in water purifiers. Catalysts are in place to drive growth and address product servicing opportunity. Valuations factoring in recovery and currently trades at 36 times FY26 EPS. Nomura expects core to deliver revenue CAGR of 12% over FY23-26 and it sees margin improving to 14.9% by FY26 from 10.2% in H1 FY24. Last one is electrical segment. Jefferies says channel checks indicate healthy festive offtake in lighting, mobiles and TVs. Most products have normal channel inventory except lighting. As per Jefferies, Polycab, Phenolix cables are poised to benefit from capex and housing demand, and healthy festive sales can benefit Havells, Vanguard and Dixon.
Got it. Thanks a lot for that, Sudarshan. Well, let's hop across to Manisha. She's there to tell us about all the action that's going on in the commodity markets. Morning, Manisha. Good news. Crude has dipped a little bit and gold continues to shine.
Oh, yes, it has. So I'll start with the crude oil prices, which is trading at a 4-month lows right now. There is still uncertainty about the OPEC and allies' voluntary output cuts. And you also have seen the U.S. rigs rise by 5. Also weak demand from China, weak manufacturing data from U.S. All of that seems to be weighing on. So we are trading at a 4-month lows onto this one. Some profit taking is what we are seeing in metals as well. So gold, after hitting an all-time high at 2,150, is now trading around 2,050. So we've seen $100 come off here. Silver prices fell 3 0.3% overnight. Copper fell 2.5%, and zinc is trading at a one-month lows as well. So there is profit taking across both that we've seen. Markets will now watch out for the China trade data that comes in on Thursday, and on Friday you have the U.S. non-farm payroll numbers coming in. So that would give you further direction.
All right, Manisha, thanks very much for that. We'll take a quick commercial break here. When we come back, we'll be joined by Nischal Maheshwari, CEO, Institutional Equities Advisory at Centrum Broking. So that conversation comes up. And we'll also be playing out some sound bites we got from managements of GMR Infrastructure, HUL, and others. Stay with us.